Okay, so this is going to be day 2 of technical analysis, and we're going to cut this into 2 different parts. Let's talk candlesticks, those red and green bars that you see all over your stock charts. Why do candlesticks matter? Because they tell a story. They're not just shapes. They show us the battle between buyers and sellers, who's winning, who's losing, and where the price is potentially going to go. If you're serious about trading, mastering candlesticks is going to be a must. Here's the thing. Every single candlestick gives you 4 key pieces of information. 1, the open. So this is where the price started during that specific time frame. Think about it like the starting whistle in a game. Then you have the close. This is where the price ended when the clock ran out. So think about that like the final score. Then you have your high. So this is the upper line. It's usually called a shadow or a wick, and that's the highest price that the stock reached during that game. The peak moment where buyers push the price up. And then you have the low. That's the lowest price. That's where sellers took over for a bit and drug the price down. If the candlestick is green, then that means buyers won and the price closed higher than it opened. If it's red, sellers took over and the price closed lower. That's pretty straightforward, right? Just think about it like a balance beam. Buyers pull the prices up to the high, sellers pull it down to the low. And then where they settle gives you the open and the close. Once you start to see it that way, it's a lot less confusing. It's just the story of momentum, the strength or the speed of the price movement between buyers being the demand and sellers being the supply, if you're learning to read it. Each candlestick represents the price change during a specific time frame. So for example, on a 5-minute chart, each candlestick shows 5 minutes of price movement from the open to the close to the high to the low. Switch to a daily chart. Now each candlestick represents an entire day's worth of price movement. See, time frame is key. Okay, here's what I want you to do. Go to a daily chart for any stock and pick one candlestick. Ask yourself, can you see the open, close, the high, and the low? Start recognizing these different parts of the candlestick, and we're just getting started. In part 2, we're going to get into some important candlestick patterns that are going to take your skills up a notch. Being able to see and interpret these quickly is going to give you so much more confidence in market trends. Remember, every professional started off as a beginner, just like you. You got this.